Since inventory can be one of the largest assets that a business has, it needs to be valued. This means that monetary value needs to be assigned to the inventory. When it comes to manufacturing and inventory valuation, this isn't as easy of a process that it is in other industries. Inventory refers to the goods and materials that a business holds for the ultimate goal of production or resale. In today's video, we'll start by discussing the inventory involved in manufacturing. Accounting for inventory in a manufacturing company. Raw materials. When valuing the goods in manufacturing, you need to take into consideration not only the value of raw materials, but also the value of the work in progress and the value of the finished goods as part of this process. As well, if there are any ending balances of materials or inventory when the period ends, these must also be properly valued before being recognized. To further explain, the raw materials or the direct material inventory includes all the materials that the manufacturing company uses in order to make its product. For example, if you're in the computer industry, this would include the motherboard, metals, and so on. These products are typically listed on a bill of materials that you receive and will itemize not only the quantities, but the cost of the materials that you're using. Work in process inventory. The next type of inventory is your work in process inventory. This inventory includes anything that is still in the process of being made but is yet to be completed. This inventory value is based upon how far along the process of being built it is or how complete it is. Once the work in process has been completed, the inventory is transferred into the finished goods inventory. Finished goods inventory. Finished goods inventory includes the costs that are associated with the completed goods and are ready to be sold but have yet to be sold. As well, the manufacturing costs noted previously, whether they be direct or overhead costs, are included in this inventory until the products are sold. At this stage, the cost of completed goods are now called the cost of goods manufactured because they are complete. Free onboard shipping point means that the customer will own the merchandise as soon as it leaves the manufacturing loading dock. The manufacturer is not responsible for the goods during delivery. Free onboard destination means that the manufacturer owns the inventory until the buyer actually receives the merchandise. Direct material costs. Direct material costs include anything that is used specifically for your product. In our example noted, this would include the metals and motherboards, as well as with other industries manufacturing also a direct labor cost. The direct labor costs also include anyone on the assembly line that is putting your computer together. Indirect costs. There are also indirect costs, and this could include any indirect materials, such as screws that the company purchases in bulk and does not assign to specific inventory. There's also the expense of indirect labor, such as supervisors or support staff, that needs to be taken into consideration. Overhead costs. A manufacturing company will have overhead costs as well. These costs need to be added together, then allocated to the number of units that are being produced within a specific reporting period. This is an important cost to remember and needs to be added to the cost of inventory. This includes costs that are associated with the manufacturing plant itself. This would include any building maintenance, taxes, insurance, utilities, depreciation, and so on. Your bookkeeper or accountant will need all these amounts, including the raw materials for production, the cost of goods manufactured, and cost of goods sold in order to prepare the income statement. There are schedules that are created so that the allocation can be easily seen. The three schedules include the schedule of raw materials, the schedule of work in process, and the schedule of cost of goods sold. Each schedule is required in order to fill out the next schedule. To make better sense of the schedules, look at the inventory cost flow equation that is used for each. Beginning inventory plus purchases equal cost of goods available for sale. Cost of goods available for sale minus ending inventory equal cost of goods sold. As an example, some may then add an additional schedule, combining the schedule of cost of goods manufactured and the schedule of work in process, or they may simply go on to the schedule of cost of goods sold. These schedules are typically created for internal use, and only the income statement is shared. The information that is transferred onto the income statement looks like this. As a final note, we want to briefly touch on inventory management. Having inventory for too long of a period of time isn't good for a manufacturer's business. There are not only the concerns over any increase in storage costs, but there's also the threat of the goods becoming obsolete while sitting in storage. On the other hand, having too little inventory also has its share of problems. You may run into issues with the supply chain system that would then cause the manufacturer to not only lose the profit for potential sales, but they may also start to lose market share over time. Once a customer chooses to purchase this item, the retailer will purchase the item from the manufacturer. The benefit to the manufacturer is if their product is being promoted to an end user. The downside may be that their product is in their inventory for an extended period of time. How best to manage your inventory is something worth discussing with your bookkeeper or accountant. And need help from an expert? We know that this can be complicated. Have one of our experts at Valley Business Center help. For over 30 years, Valley Business Center has been providing comprehensive bookkeeping, payroll, and tax services to our clients in Whistler, Squamish, the Sea to Sky Corridor, and Metro Vancouver, BC areas. Valley Business Center provides reliable and effective services to all clients. Don't forget to subscribe and hit the notification button to hear more helpful information. And thank you so much for watching.